Spot Bitcoin ETFs are seeing massive momentum, with over $2 billion in inflows across the last 8 days, signaling that institutional appetite for Bitcoin remains strong. Large investors continue allocating capital through regulated ETF products, making it easier than ever for funds, wealth managers, and traditional finance players to gain BTC exposure. This surge in inflows suggests growing confidence in Bitcoin's long-term outlook, especially as adoption expands and supply remains limited. When institutions consistently buy through ETFs, it can reduce available market supply and strengthen bullish sentiment across the crypto market. Is this the beginning of the next major Bitcoin rally? In this video, we break down what these ETF inflows mean, why Wall Street keeps buying Bitcoin, and how this could impact BTC price in the weeks ahead. Bitcoin funding rates have remained negative for more than 46 consecutive days, the longest bearish stretch since the FTX collapse in November 2022. That means many traders are still heavily positioned against Bitcoin, expecting lower prices, even as BTC continues pushing toward the $80,000 level. At the same time, open interest is rising, showing that new leveraged positions are entering the market, and much of that appears to be fresh short positions betting against the rally. This creates a dangerous setup for bears. Why? Because when price rises while shorts keep piling in, the market can build massive squeeze potential. If Bitcoin breaks key resistance levels, short sellers may be forced to close positions rapidly, triggering aggressive buy pressure and sending BTC even higher. In simple terms, bears are paying longs to wait. Negative funding means short traders are paying fees to those holding long positions, while price keeps climbing against them. That often signals stubborn bearish sentiment during a strengthening market. Could this be the fuel for Bitcoin's next explosive move? In this video, we break down funding rates, rising open interest, and why a major short squeeze may be closer than many expect. Bitcoin is currently trading at $78,347, showing strong resilience after a volatile week. Over the last 7 days, BTC reached a high of $79,500 and a low of $73,753, highlighting a wide trading range as bulls and bears battle for control. Despite recent pullbacks, Bitcoin remains close to the key $80,000 resistance zone, a level many traders are watching closely. A breakout above $79,500, $80,000, could trigger fresh momentum and potentially spark the next leg higher. But if BTC gets rejected again, short-term support around $75,000 to $76,000 may be tested. The fact that Bitcoin bounced from $73,753 and recovered toward $78,000 shows buyers are still stepping in on dips. That's often a sign of underlying strength during bullish market phases. With ETF inflows rising, institutional demand growing, and funding rates still negative, many believe Bitcoin could be building energy for a major move soon. Will BTC break $80,000 and run higher, or pull back before the next rally? In this video, we break down Bitcoin's current setup and what traders should watch next. Bitcoin has broken down from its ascending channel, signaling short-term weakness after failing to maintain upward momentum. However, BTC has already found strong support around the $82,588 level, showing that buyers are still defending key zones despite the recent breakdown. This support level is now critical. If Bitcoin continues holding above $82,588, the pullback could simply be a reset before the next major move higher. But if support fails, traders may expect deeper downside and more volatility in the short term. For the bullish scenario to return in full force, Bitcoin needs a 4-hour candle close above $99,000. That would reclaim major resistance, invalidate recent bearish pressure, and potentially open the door for a move toward new all-time highs. In simple terms, above $82,588 equals buyers still in control. Above $99,000, for H close, equals strong breakout confirmation. Below support equals risk of deeper correction. Bitcoin is now sitting at a major decision point. Will bulls defend support and push toward 6 figures, or is more downside coming first? In this video, we break down the key levels, market structure, and what traders should watch next.